Hey everyone, Sean here with the second video of our company overview series. Go check out our first video, Nick's company overview on Nikola Motor, if you want to learn more about their proposed hydrogen infrastructure and all the challenges that poses. Anyway, with interest rates so low at the moment, I thought it would be a good time to talk about a public company with a business plan that's much easier to understand, arguably more innovative, and certainly more attainable than Nikola. These guys are up 90% year to date and about 300% from the market bottom in March, and for good reason. I'm here to explain why Redfin is living out their mission to redefine real estate in the consumer's favor and how they're set up to compete for share in a new market that will be even bigger than you can imagine. Anyway, let's get to know Redfin. So odds are if you live in one of the 90 markets throughout the US and Canada that this real estate disruptor currently operates in, you've seen one of their signs posted in front of a house, condo, or other property in your area. At first glance, the company may seem to be a traditional real estate broker such as RE/MAX, Century 21, or Keller Williams. Or maybe you've been on their app or website, which is reminiscent of Zillow or Apartments.com in the way that you can browse real estate listings in your area on a simple, intuitive map. However, as I'm about to explain, Redfin is much different in several ways. Let's jump in. I'm willing to bet that if you ask any honest real estate agent you know about Redfin, Zillow, or anyone like them, they'll tell you the ways the residential real estate market currently operates will be completely reimagined very soon. Now, before I get ahead of myself, let's understand exactly what Redfin does and how they're disrupting the real estate industry. The company operates in three intuitively interconnected business lines: real estate brokerage, mortgage origination, and possibly their most promising line, RefinNow, an instant buyer or iBuyer program. We'll talk about that later. Let's start with their main breadwinner at the moment, brokerage services. Now, if you don't know how a traditional real estate listing process works, listen up. A seller hires a listing agent on a commission basis to list their house, take pics, post open houses, basically do anything in their power to bring in a buyer. Most buyers looking for a house, at least at the moment, enlist the help of a buyer's agent to find them a home that checks all the boxes they're looking for in the client's price range. So after a buyer's agent finds a home that their client is happy with and they close on it, both the buyer's agent and the listing agent collect commissions from the seller of the property. Meanwhile, the buyer only pays closing costs and other related fees. Now, the typical commission agents charge up until now is about 3% for the listing agent and 3% for the buyer's agent, for a total of 6% commission paid by the seller. This varies, but this is considered the industry standard. Now, Redfin, through the use of their efficient technology-based platform, has slashed this listing commission to 1.5% and even 1% in some cases. Ultimately, if you sell a house through Redfin, you will only pay about 2% to 4.5% tops for both the listing and buyer's agent's commissions versus the standard 6%. This makes a big difference when you're talking about most people's most valuable asset. They offer this low commission by not paying traditional commissions to their agents, who are actually paid mostly through base and bonuses based on customer satisfaction, not just the price of the home like traditional agents. This really aligns the customer and the agent's goals. Now, that being said, Redfin's agents make more than the median real estate agent. On top of that, it's my understanding the agents have extreme flexibility comparable to an Uber driver or other gig economy worker. Then they basically have their leads and clients handed to them through the Redfin platform, which advertises extremely efficiently online and offers a very intuitive app and website for browsing homes, complete with 3D video tours and super easy setup appointments to tour properties in person. Now, obviously, if you're listing a house and you're presented with an option that will sell your house faster for more money and charge way less commission on what most people consider their most valuable asset, you're bound to consider ditching your local RE/MAX rep for the Redfin platform. Now, there's a lot of features and services Redfin offers to sellers, but we'll put that in our follow-up video, so stay tuned. Let's talk about the second line of business that makes Redfin the total package, mortgages. It's simple, really. Redfin offers home loans right on their platform, much like LendingTree, Zillow, or any other comparable speedy mortgage service. Except it's right there on the Redfin platform. See a house you like, enter all the information into the site or app, get approved for a fair mortgage same day, and make an offer online just like that. You can do it as fast or as slow as you want. No more watching your dream house get scooped out from under you while you wait for your paperwork to be processed by the bank. They get a nice fee from the lenders they sell to also, so it's definitely a good value add for their operations. To eliminate risks associated with this, Redfin almost immediately sells these mortgages to financial institutions who then bundle them into mortgage-backed securities. In addition, they also have hedges in place to help minimize any risk of getting stuck with these mortgages on their books. Okay, now I want to talk about the business line that makes Redfin a true force to be reckoned with and a true disruptor of not just the way people buy and sell, but the way the entire real estate market operates. RedfinNow, their iBuyer program or instant buyer program. So the way this instant buyer program works is the company, using over 15 years of data collected firsthand in the broker business, has become exceptionally competent at pricing homes in all markets using their technology. In the last couple of years, using their sheer scale and pricing efficiency, Redfin has started making almost instantly acceptable cash offers on sellers' homes. This has brought something to the real estate market that has never existed before: liquidity. Now, I know you must think this sounds pretty risky, but Redfin has thought this through. One can expect an instant offer from RedeFining to be about 7 to 12% lower than what they'll tell you could sell the same house for if you went through the traditional listing process. That may sound like a lot, but if you're moving cities for a lucrative job this month, or you simply just don't want to play a 1 to 6 month waiting game, it's a welcome option for many buyers. Now that Redfin has bought a bunch of homes with RedeFining, they simply use their brokerage platform and marketing technology already in place to sell these houses quickly and for a nice gain. They're obviously experienced in selling homes and have scalable infrastructure in place. I failed to mention this earlier, but they even have a level of listing service, concierge, that will, for a higher fee, recommend and carry out home improvement projects to increase the sales price of your home. Add to that, they complete the projects for you through discounted vendors they partner with. Now, with a service like that in-house at their disposal, Redfin is bound to at least break even on even the worst iBuys. Hell, even if they lose money on some houses, they're doing this on such a large scale with such efficient technology that they're bound to net a nice profit on the overall iBuying portfolio. Now that we've discussed everything Redfin does, let's think about competition in the market. There are several competitors in the brokerage business, but none with the level of technology, data, and fee structures of Redfin. Not to say there's anything stopping them from changing their ways, but they're certainly playing from behind. Next, yes, there are many competitors in the mortgage industry like LendingTree and Zillow, but the one-stop shop aspect of Redfin Mortgage offers much convenience, especially if the rates are the same. Even if consumers go with another mortgage service or bank, they're still buying from Redfin, so it's not a complete loss. However, by offering the service, they set themselves up for a solid source of fee revenue. Finally, there's one existing competitor in the iBuying market that actually has more revenue in the segment than Redfin at this point: Zillow. Now, while they have a bigger market share of this young market at the moment, there is a key distinction to be made. While Redfin's main line of business at the moment is their brokerage biz, which markets and sells homes in the market every day firsthand, Zillow's main line of business is advertising and data services for existing real estate agents. All that being said, they probably have just as much, if not more, geographical data on housing transactions, pricing, and customer feedback than Redfin does. This is why the two companies, in my opinion, will be kings of the instant buyer or iBuyer market. Not to say one sucks, because they both seem like quality companies. However, as you can tell, I'm pretty biased towards Redfin. It should be noted that I've owned the stock and call options, and I've done quite well, especially recently. And I recognize that makes some bias. Now let's get into the stuff that really matters for you investors out there: valuation. First, let's think about the size of the markets Redfin operates in. The residential real estate brokerage market in just the US by annual revenue is about $300 billion. And the mortgage origination business is at least proportional, but larger if you add in refinancing. Now, the iBuyer market, well, that takes some thinking since the market is basically brand new. So in terms of how revenue is measured in the iBuyer market, it ends up being the entire sale price of the flipped properties instead of just the 3 to 6% that a normal brokerage would collect. So it's exponentially larger. To gauge the potential size of this market, let's multiply the annual US home sales, about 6 million, times the median home prices of about $280K to get a rough estimate of the total value of residential real estate transacted in the US annually: approximately $1.7 trillion. Now let's not kid ourselves. Not everyone is willing to accept an instant offer on their homes, at least not anytime soon. Let's say only 10% of people selling their homes are willing to accept a fair instant offer. I'd say that's conservative. Anyway, 10% times 1.7 trillion makes a $170 billion potential market in which Redfin is a key disruptor and first mover. Not bad for a company with a market cap under $4 billion at the moment. If they can manage to take just a small percentage of this market, they will be sitting very, very well. Redfin's iBuyer program, which started as an experiment in 2017, has grown extremely aggressively since their start, and at an even faster pace recently. Assuming a pretty aggressive decline in the growth rate over time, Redfin is still on pace to have annual revenue of over $15 billion, probably more, from just this segment in the next 10 years. And that's even starting at a very low level relative to the potential market. Add to that the fact that there is immense synergy between the iBuyer program and the rest of operations. The existing brokerage business, for instance, will sell the iBuyer program's inventory, and the mortgage business will make financing for their customers easy. This means barely any added cost relative to if they were to undertake this operation on a standalone basis. In fact, it actually adds to their mortgage origination business through the additional sales. In essence, this means higher margins in the segment from savings on redundant costs on top of profits already earned on their other business lines. Now, I did run a detailed discounted cash flow analysis with what I consider to be pretty conservative assumptions and arrived at a price slightly above what it's trading at the time of this video. While I won't share with you the exact details of my DCF just yet, I will provide the key assumptions I operated under while building it. To start, typically, I don't try and predict cash flows from investing or financing activities. Making assumptions of such things, especially in a high growth stage company such as Redfin, means you believe you share the same logic as Redfin's CFO and upper management. In addition, you know exactly what time period they will make these investing and financing decisions, and you will also be able to continue to predict this consistently on a 5 to 10 year basis. Now, I don't know about y'all, but I can't do that. Instead, I choose to simply try and predict the trend of the company's growth rates in each business line, the cost of this revenue, how their margins will grow or shrink over time as they reach scale, and how this translates to operating cash flow. All the while, I'll keep in mind the probable capital structure, interest expenses, and depreciation expenses that will be incurred along the way. After I arrive at this operating cash flow, I leave the rest to management. I like Redfin's management. Glenn Kelman, their CEO, seems to be a smart, open guy. I suggest going to check out an interview or two. I think you'll like him too. And I'm confident that he and his team can make better decisions with this operating cash flow than I can estimate in a discounted cash flow model, at least in my opinion. These decisions will lead to the growth rates I assumed are better. And that's my first key assumption, not just with Redfin, but with most high growth companies that don't net any profit just yet. My second key assumption is the size of the market. A company can only be as big as the markets they operate in. And I discussed my assumptions for this earlier in the video. The third and final key assumption specific to Redfin that is most important for my valuation of the company to work is the potential for the iBuyer market and how Redfin can become a big player in this space with RedefiNow. Using their technological advantages and synergy of their business lines, I expect this to be possible. I assumed a very low operating margin for the business line, so scale is very, very important. I think the company will be very successful with or without RefinNow, but the sheer scale of it is what gets me excited about the stock. At the very least, I'd rate Redfin an overweight in my opinion, and recommend the stock as a long-term growth option in just about anyone's portfolio if given the right buying opportunities. While I'm bullish on the stock long-term, this video is not to be construed as investment advice and certainly not a trading tip. So do your own due diligence, don't take my word for it, and don't be lazy. Anyway, sorry if that was kind of long, guys, but trust me, I had a lot more to say and a lot more detail to discuss. So if you have any unanswered questions, would like to dive deeper into their valuation, or simply wanted to hear another perspective, go check out our next video in a couple of days where Nick and I will discuss the topic. I'll answer his questions and any of yours. So please comment below with your thoughts, questions, perspectives. I'll try and reply to each of you and even talk about some of your questions and comments in our follow-up video. Thanks, guys. Please continue to follow us. We're just starting out, but plan on posting early and often. We look forward to filming more company overviews, market analysis, and discussions on just about everything going on in finance. Please let us know if there's any topics you'd like covered, and we'll do our best to accommodate. But thanks again for watching, guys. Don't forget to hit like and subscribe below. It takes half a second for you, but it really helps us out a lot. So see you next time.